Hello all, Tony here. Well, we saw US equity markets rebound strongly on Friday, capping off a volatile week that saw significant risk reduction across multiple asset classes, including precious metals, crypto, and tech stocks. Now, despite the turbulence, the week's defining trend, rotation from tech into cyclical stocks, accelerated into the weekend. And we'll show you how to position for this in just a moment. Now, risk sentiment has been further boosted at the start of the new week after Japanese Prime Minister Sanae Takeshi's LDP-led coalition secured a decisive two-thirds supermajority in Sunday's snap election. Now, looking ahead to this week, we have the Q4 US earnings season, which continues to roll on, as well as the delayed January non-farm payrolls report to look forward to. Let's take a look at the charts to see how they look at the start of this new week. A quick recap of the NASDAQ. If you recall last week, we were talking about the potential of a double top here. And you can see that we did get some downside follow through. It didn't quite get to that 24,000 support area we were targeting, but a good move lower before this rebound on Friday. And what that does is it leaves the NASDAQ broadly trading within this range between 26,200 and 24,000. We really need to see the NASDAQ get above these highs here to reignite the upside. In the meantime, allow for more sideways price action. Now, for the Dow Jones, a bit of a different story. It spent the first 5 weeks of 2026 consolidating, a bit like the NASDAQ, if you like. However, what you can see on Friday was it surged above this resistance area at 49,600, which now becomes support. So while the Dow Jones remains above this support area here, short-term support, I think there's a good chance for it to push on higher, potentially up above 51,000. So about another 1,000 points higher at this point of time. Now, there is one way to trade this. For those who don't feel comfortable taking along on the Dow Jones at fresh record highs, which I have sympathy for, you might like to consider a pairs trade. Now, a pair trade's where you're short one indice and long another indice. If you're looking at indices, you can also do it in stocks as well. But what you can see, this is a chart of the NASDAQ 100's outperformance against the Dow Jones for the better part of 3 years, since January 2023 up until this high here, October 2025. Since then, the Dow has started to gain some strength compared to the NASDAQ, with that move really starting to accelerate over the past week and a bit. And you could probably argue that there is a case for this correction to continue down towards this area here. You've got some previous lows coming in, and that would suggest continued outperformance from the Dow. So the trade would be to be long the Dow, short the NASDAQ. It wouldn't be a dollar for trade. You've got to take into account the fact that the NASDAQ is more volatile than the Dow Jones, and that you would probably have a smaller position in the NASDAQ as a result of that than you would in the Dow Jones. But this is a trade that I'm looking at. I quite like the look of it, and one that I wanted to flag this week for you. That's all for now. Stay tuned for more market updates ahead.